traders, Gary Wagner here, just about 1 o'clock in Honolulu, 6 o'clock in New York. It is Thursday, 11th day of January, 2018, and this is the Daily Report for Gold and Silver. A weak dollar really gave some tailwinds to the precious metals markets. Gold closing moderately higher, up $3.70 at $13.23. Even with the weaker U.S. dollar, silver did close slightly in the negative, down 3 cents, but at $17 per ounce. And as I said, that's all in light of a dollar that is currently tracked at 91.64, and that is a decline of about 0.4%. Equities as a whole were higher on the day, but the Dow screaming up about 200 plus points, closing at 25,574, a 58-point rise in the NASDAQ, 7211, and the S&P at 2767. That is up 19 points, all closing at new all-time record highs. Bitcoin futures considerably under pressure, continuing the decline, trading now at 1330 and 13405 respectively, with the CME and the CBOE Bitcoin futures contract. We have gold prices exhibiting moderate gains today, currently trading up about $3.80, fixed at $1,323.10. What is most impressive about recent gains in the market is they come after some weakness that came into the market on Monday and Tuesday of this week. And that would be these two red candles right here. Friday, we did have the market close lower than it opened. That's a small-bodied red candle. But as you can see, it did close higher on the day, although slightly higher. And that's after trading to the highest point gold has traded to in this calendar year, which is 1327. And given that gold pricing had been softening both on Monday and Tuesday of this week, trading to some lows at around 1308, down to about 1306, which occurred last Thursday, the most recent gains exhibited in pricing today as well as yesterday tell us that what we could have been looking at over the last couple of trading days was market consolidation rather than the beginning of a correction. Of course, for us as technical traders, we would not be able to say that without solid confirmation, and to get that confirmation, we would need to see gold pricing close above 1327 and stay there for some sustained length in time or move higher off of that particular price point. Now, currently, we are active in our trade in that we went long at 1265. We have been really putting profits to the side as this market has moved up, and we have trailed our stop up accordingly. Stops are currently sitting just below 1306, with recent lows at about 1308. And when we look at the low over the last 3 days, they come in around 1308. So I don't see any room for us to tighten these stops. I think that they're rather tight right now. So my recommendation in terms of our gold trade is to maintain our long current position, maintain our current stop placement. For those clients that pulled profits last week and are asking for a re-entry point, my sense is that a break and close above 1327 would be a trigger to re-enter the market from the long side, placing stops where we currently have them below 1306. Our opening letter today speaks about the fact that today's upside move was exclusively dollar weakness coming into the market. And when we look at a dollar chart up on the screen, we can easily see that we are at a fairly critical point in terms of current dollar pricing on the dollar index. The dollar index gave up roughly 0.4% today, currently trading at 91.69, which is off 38 points on the day. What we can see when we look at this chart is that we have had a series of lows come in around 91.50, and I believe that further dollar weakness would pretty much necessitate this market going to a major level of support that comes in at 91. And here is why I think this level is so critical. Because if the market continues to decline and in fact moves to or below 91, we would see this market have a significant move lower because there is really a price void when we look at this area on a longer term basis, and a sustained move, of course, below these lows here would put pricing in such a precarious place on a technical basis that we wouldn't have any major support until about 89 on the dollar index. So we could see some further erosion, and we can see that this particular price point here at 92 is fairly critical, and we have in fact broken below that. This is the last area in which the market could find support, and as I said, a decline below that point would really signal a dramatic further decline in the dollar index. And it would be exactly that type of action that would move gold pricing up to the highs achieved last year at around 1363. And traders, as far as silver goes, there has been a disconnect over the last few days and is currently not trading as closely in tandem to gold as it typically can. We have seen this market fall under greater pressure than gold, and whereas we saw a dynamic rally bouncing off of the recent lows that came in gold and moving higher, we have had silver trade with a lower low today as well as a lower high, closing down about 3 cents on the day. Therefore, in terms of trading silver and re-entering the market, I do recommend that you sit on the sidelines until we get some solid indication that a bottom is in place. And traders, lastly, I do want to take a look at Bitcoin futures. Bitcoin futures has certainly been trading under pressure today, currently trading at $13,390 per Bitcoin. Now, this is a shorter term 240-minute chart. We just don't have a large data set. When we convert this to a daily chart so we can see the activity of today's trading, we can see that the market had traded today as high as almost 15,000 and traded as low as 12,700, currently settling, as I said, at around 13,300. And so we've had a pretty dramatic decline. The question is whether or not Bitcoin futures as well as Bitcoin Cash can find support at its current level. Traders, there is no doubt the US dollar has really provided good tailwinds for this most recent rally in the precious metals markets, considering that the dollar began its decline on December 12th of last year and gold began its rally on December 12th of last year. We can definitely see the correlation. From my opening letter, we looked at the rise in gold in terms of pricing, and we saw that about 40% of the $85 rise in this rally was due directly to a weakening US dollar, but the other part of the 100% was due to buying. So there is buying in the market. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the weekly wrap-up and review.